Good evening, Jacob Field speaking. I'm not quite ready to get started. I will wait a few moments and make sure there's all the guys arriving on time. But just before we get started, if you could see and hear me correctly, I'd love it if you could jump over onto the chat bar on the right-hand side of your screen and just give me a big yes. See and hear correctly. Won't be a few moments. Good evening, Jacob Field speaking. Thank you for joining us tonight. I'm really excited to get through the content. We have got a bit of a different focus. Generally, we're all about capital growth. We will be doing a capital growth case study towards the end, but I am going to be taking a little bit of a different slant on things tonight with a focus on growth with renovation potential. In the last week, we've launched here at Ripe House a co-authored report with Jane Slack-Smith from Your Property Success and Mortgage Choice. The report is based on the rigorous and well-developed algorithms and data sets we have here at Ripe House, and we've been working back and forth with Jane to really fine-tune her secret sauce, and we've found 25 suburbs that really pass the test and included 5 of them in a monthly report, which we'll be going forward with. So tonight we'll be referring back to that, and I'm picking one suburb out of that report that really is at the pinnacle of the renovate for profit with growth on the back end. So we're not looking at selling, we're looking at holding to sustain that growth. We're going to be going through that suburb and finding that there's only 800 dwellings that actually tick all the boxes, and there's one property on the market in those dwellings that right now that looks outstanding. In just doing my quick research before this evening. So thank you to all who said that you can see and hear. John, Sharon, Russell, Peter, Anna, John, Catherine, Haley, Nesta, Angela, Haley again. Thank you so much for saying that you can see and hear correctly. I'll jump right into the content, but I have included a link, which I'll do again over in the chat bar, which if you are having problems with the audio and visual quality, just slightly fuzzy or audio slightly slow, you can click on that link and view the live event over on YouTube directly. It might improve your quality, but you won't be able to chat there. So that's a little bit of a tip. You are also able to reconnect. Thanks, Pam. Audio is awesome. Reconnect your browser and that might resync things. But a lot of you saying that all great here, which is really nice to hear. So let's jump right in. Lots to get through. What I'm going to be talking about primarily tonight is mind-boggling capital growth. What I mean by that is really stepping ahead of the game, trying to beat the heat into markets, and really achieve outstanding capital growth from day one of our investment. And this is going to be taking a renovate for profit slant on things tonight. So generally when we usually talk about capital growth markets, it means you're going in there and getting growth on investor-backed demand, and you might not have a huge amount of upside for renovation. Tonight we're going to be looking at from 2 angles. One from just the vanilla capital growth strategy, where the capital growth, organic capital growth from a suburban local government area level might be slightly higher, but we also be taking the renovate for profit approach tonight as well, where you might give up a little bit on the organic capital growth at a suburb level, but you might be able to manufacture a little bit more at the renovation level. So I'll be taking you through both when we go through things tonight. But what I'm going to be talking about is how we can really put together some pieces of a puzzle around a process that we can repeat to outperform the normal capital growth that investors try and achieve. I'm going to be talking about really supercharging that growth and getting mind-boggling results. So a little bit about me before I get started. I've been investing since I was actually a teenager, so it's going on about 15 years now, and currently own properties across Australia. Love and very passionate about property investment, and I really love talking and working with other investors in any capacity, other professionals in the industry. It's what I really enjoy. I do have a technology background, and that has led to me founding Ripe House in 2011. So it was originally a tool for me to be able to help and work through investing in Sydney when I moved there with my wife. Going back a few years now. So Ripe House started there, and it's really morphed and evolved into an end-to-end platform and everything that it is today to help myself and other investors invest with a little bit more confidence and certainty, and to really empower us to act, which is what it's all about. And just down there at the bottom, I try and keep myself relatively fit playing basketball, which is quite difficult these days with 2 young kids running around. So yeah, a little bit about me, but if you've got any questions, I'd love to hear about what you're trying to do, where you're coming from, where you're listening from tonight, where you might be looking to invest. Say hi. Lots of you on the line, so it's a great turnout on a Thursday night. But I really wanted to try and keep this a very dynamic and engaging event. So let's do it. All right, just a bit of a checklist, what we're covering. It's going to be super interactive. Let's really engage. If you've got any questions, if they're relevant, I've got I do all of my webcasts myself, so I can really work back and forth with the questions coming through. I found that's the best system for me, so I will respond right as they're coming through if they're relevant to what I'm speaking about. If they are more subjective to what you're trying to do or unique to your situation, or something that's not really quite relevant to what I'm speaking of at that moment, I'll grab it at the end and pull them up there. So there will be an extended question and answer session at the end. So stick around for that. So right now, before we keep moving, let's just tell us a little bit about yourselves. Are you currently renting? Do you, or potentially owner-occupying with a mortgage, or owner-occupying without a mortgage? And do you, so that's question 1, and do you currently own any investment properties? So just while you're answering that, a little bit about me. I actually, it was my 5th property that I purchased. That was the first property I actually lived in of my own. So a lot of renovate for profit in the early years, and doing a lot of the work myself before we're actually able to buy our first residence to live in Lane Cove. That was going back in 2011, 2012. So I was really rent vesting, I suppose is the catchphrase these days, but I was all about trying to get ahead and investing from an early age. I wasn't able to invest and live in the areas that I was potentially giving us the upside as an investor. So a few of you: Anna, owner-occupier without mortgage. Bill, rents. Haley, investment property and renting. Sally, owner-occupier without mortgage, no properties. Bill, no IP yet. Robin, I own my own home and have a number of rentals. Pam, owner with mortgage and a few investments. Prasath, owner-occupier with mortgage. Nesta, own my own property and have a mortgage on it and 6 investment properties. Ray, owner without mortgage and have 4 properties in UK and 3 in the UK. 4 in Australia and 3 in UK. So multiple countries. John, renting 1 property. Look, there's lots more coming in here. I won't be able to get through them, but common theme. Helen, owner-occupier plus 1 IP. There are quite a few, and Kit planning to do rent vesting. So there are quite a few of you who are actually renting whilst looking at investment properties. And that probably brings things to the point of you are willing to live, this is just a side note, you are willing to live in the suburbs that suit your work and your lifestyle and invest remotely in other areas to get that great return. So I will be talking about that, and that's called what I refer to as the catchment area. So your catchment area of investment, and that's usually quite different to where you live and work. And the further the distance, potentially the more opportunity, the more options that you might have. Yeah, I'll be covering that a little bit more and that is one of the key elements to this. I suppose it's a cutting edge approach to property investment. So we're trying to really piece together puzzles to amplify our results and get above the norm. So we're really trying to break free of the larger groups of property investors, maybe potentially less sophisticated. We're trying to be at the forefront of research and the industry to achieve above average and above and beyond results. But what we're going to be talking about, I am going to try and relate it back to common sense, but it is backed by our research and the technology, which I think is absolutely cutting edge. And I'll be going through and illustrating, and you'll be able to really see the software and what I'm doing tonight. Because even without Ripehouse, it's really just common sense on steroids, I suppose. Excuse that term, but it really is trying to really amplify what we've always done at a very piecemeal approach, which is, yeah, if you've got any questions at any time, stop me and I'll really elaborate and try and work and talk through the reasons why the software is how it is, or what it's trying to achieve for our investment and decision-making process. And I will be going back to, so as I mentioned, 2 real-life Suburb case studies tonight, and then also talking through other investors who use the platform and some of the things that they're able to do and how they're able to do it. And, you know, you'll be able to take away all of the content tonight. I really try and stand above and provide amazing content for you, you know, leave you aghast and go, wow, this has really empowered me to invest and helped me to understand how it all fits together and be able to go out and get amazing results, you know, yourself. It's all about empowerment. So that's what tonight is all about. Okay, let's jump right in. So this is the secret sauce. This is the platform. This is the process. But look, this graphic is very simple, but there's a lot of key elements that people sometimes don't think about. They sometimes have conflicting messages at each part of the process. What it's all about is giving ourselves mechanisms to increase our catchment area, get the local government area right for ourselves, our strategy, and not impose ourselves onto an area, but really try and sync our own outcomes and strategy to the optimum #1 candidate area across the country. Once we've got the local government area right, we need to be able to drill down to suburbs that are really leading the charge in that local government area, then streets that are amplifying the suburbs' growth and really leading the suburb ahead, then the exact properties that people are demanding to live in that suburb, the types of properties, making sure that's consistent with the reasons why people might be migrating to that suburb. Then we need to be able to negotiate and do that effectively and be able to leverage information, which is power, to negotiate and potentially buy under value or under market. So I'll be talking through some strategies to be able to do that. And that all together is the pieces of puzzle to generate outstanding capital growth. So I'm not talking about 5% capital growth. I'm not talking about 8% capital growth. I'm going to be talking through a Ripehouse investor who in the first 10 months of his membership bought 10 properties. The average capital growth per annum for each of those 10 properties was 25% growth. So I'll show you how you can find suburbs at the optimum point to start growing in value from day one and not have a time delay there, how to amplify your growth by able to get that street level research and the property acquisition right, and to potentially how to use information and knowledge to negotiate and buy under, so you can really get amazing results in that first year. That's what it's all about. I just wanted to ask, let's stop and think for a moment, how much a system or a platform would be worth to you if it was able to do these things, because you know, this is a process we're able to really try and stay ahead of the curve. If we can repeat that over and over again, how much would that be worth to you? Let's keep this interactive. So jump on the chat, bring it through. Would it be worth 5,000 as something that you can go away and grab amazing capital growth with and have that resilience and empowerment to be able to do it and make those decisions? Maybe 10,000, which may sort of bring you up into having a buyer's advocate that can buy one property that might tick these boxes or be able to generate those types of results. But what if the system potentially didn't really include transactional costs or large big ticket educational or buyer's advocate costs? What if the platform was scalable and allowed and stood by you to support multiple purchases and have that resilience to be able to do that? The numbers, I'd love to get some of your feedback. Yeah, so priceless. Some of you have been, yes, 50,000. Some of you jumped in quite early at 5,000. Yep, that sounds about right. Yeah, so keep it coming through. But yeah, I just wanted to probably get us thinking a little bit about that. There is a bit of a time delay as well, so I'm trying to coordinate the chat coming through. But yeah, I just wanted to probably put a little bit of a stop and think and try and work through this process to assess what it might potentially mean to us. Let's jump right in. Strap yourself in. The next slide, I'm literally going to jump into how we can start methodically doing this. So how we can get these pieces of the puzzle together. You can take these pieces of the puzzle away and just apply the concepts over and over again in anything that you do. But I'm going to show you the insider cheat sheet, I suppose, to how you can string them all together to get amazing results. And it's all about empowering you. And I define you as myself as a DIY property investor. So a do-it-yourself property investor. You're interested in empowering yourself with knowledge and learning to be able to use technology and data to get amazing results and stay ahead of that curve. If you visualize things as a wave, trying to stay ahead of that wave and surf down it and not be behind it and trying to fight through and catch up. That's what it's all about. So we've got to be right on the cutting edge of what we do, but it needs to be able to facilitate clear and confident decisions. So that's what it's all about. So number one, you've seen the little chart there, but number one is about increasing your catchment area. So I'd just like to start by thinking about, if you were to invest in the suburb that you live in, you might be an expert at that suburb. You know the local dynamics, but you're sensitive then to where that suburb is in its property cycle. Things tend to move in a typical pattern. You might be having to buy that property and hold it for 5 years before you see any growth. So the further you spread your net out, you're more and more likely to be able to really find those areas set for growth from day one. And then you might find quite a large number of areas set for growth from day one. You'll be able to really be very picky about the ones that are potentially going to be able to deliver amazing results. So looking across the country at the moment, Southeast Queensland, there's 3 or 4 LGAs within Southeast Queensland without supply side risk doing really nice things, amazing infrastructure spend. The government is looking for population increases there. You've got a couple of LGAs emerging down in, or still holding up, sorry, after lots of growth through Melbourne in Victoria. You've got other little sporadic patches. Some areas in WA emerging. You've got Tasmania quite strong, but it's only one very small part of Tasmania. 1.5 LGAs and about 10% of about 10 suburbs is all you're really looking at. So it's about increasing your catchment area across the country to be able to find those optimum buying points at any one time. Probably not much chance that those optimum buying opportunities are going to be next door. You really have to luck being able to being able to time it and get that right. The further you obviously open up your sample size or your catchment area, the more likely you are to find something that's ready to go. What it's all about, and this is what I'm trying to work through tonight to give you a bit of a process that you can take away, is improving your comfort level, improving your resilience and your research, your tools to acquire and purchase anywhere. That's what it's all about. For me, when I got started in investments, it was very limited and I was stuck down, well, I'm not stuck here in Tasmania, in terms of I was stuck being able to only invest in Tasmania because it was difficult to assess other areas that I didn't live in. Data was difficult to come by. Anything past growth, yields or advanced metrics or anything, research was difficult. Community and chatting and conversation with other investors was difficult. So we really focused on our backyard. Technology has really empowered us to be able to increase our catchment area. But with that, other investors the masses have now increased their catchment area. So we've really got to get each layer right to amplify our results. Otherwise, we'll fall back into the norm. So that's what it's all about. It's about staying ahead of that curve. So what are we talking about here? This is just a really quick illustration. This is actually live data. This is my assessment pulled out of each state and where each state sits on the property clock at the moment. The property clock, 12 o'clock is a booming market. You've probably missed your buying opportunity. 6 o'clock is when things are really turning the corner towards a recovery and growth. Our optimum buying window is around 8 to 10 o'clock. You've got a little bit of time left towards the market peak, and you've got some demonstrated recovery and alignment of metrics to assess that property clock. All of our data and property clock information within Ripehouse is our own, and the really big difference and key differentiator within Ripehouse is the data is live. So what you're seeing here with these graphics, that's just me gone into our algorithms that are available at any time to show you the property clock information. We can see that Queensland is here at about 9 or 10 o'clock. New South Wales is right up here in the slowdown phase. Victoria is similar to Queensland in the green. Confused stories in Northern Territory and WA, South Australia, emerging into the recovery and growth phase. Tasmania, I've just missed out the little graphic down there. I do apologise. Is actually green as well, 8 and 9 o'clock. What this means is it doesn't really mean much. So when we increase our catchment area, we're not just looking across the whole country and going, right, I'm going to go and invest in Queensland. You can't buy a house and track the Queensland growth cycle with a house individually. You need to buy one property. So state level information is usually too general. When we open our catchment area up, we don't mean to invest in a state. It's just to give a little bit of context. Generalizations need to be avoided. We just need to drill down a few levels further. So I really like local government area level information. Local governments are around 30 to 40 suburbs by average. They generally move in the same direction at the same time due to similar factors. So it might be train lines or infrastructure or government spend, private spend, commercial spend, whatever it may be. It generally affects a local government area consistently. And we've got enough dwellings, enough suburbs to really have a good, reliable sample size of property clock information. So Ripehouse has, to the day, accurate local government area level property clocks, which I'll go into in a moment. Let's jump in there right now. Okay, what you've seen here, let me know. I've just switched tabs. If you can't see the State of the States page, let me know in chat, please. I just want to make sure it is switching over okay. What you can see here is one of 5 advanced layered research tools within Ripehouse. This is live data. I have refreshed this page and just loaded it just before the webcast. You can see it's live property clock information for state, live growth, and literally live rolling KPI data for each state. What you can do, if you're interested about investing in Queensland, you can see it's at 9 o'clock on the property clock. This is our own internal to the day live property clock information. Click on Queensland. It will then go away and find every local government area within Queensland. And now you can see individual property clock information for each local government area. This is where things get really interesting. The local government area is very specific. It's very relevant. You're not making generalizations. The local government area level is where you can really start getting amazing insight into growth likely to occur from day one. Okay, so this is where I like to start. What you can see in Queensland, you can see a lot of suburbs that are absolute local government areas that are absolute basket cases. You've got some very sophisticated filtering on the local government area page. I like to find local government areas that are between 8 and 10 o'clock on the property clock. You can see here very quickly that we've only now got 8 local government areas, a couple of quite familiar ones here. You can then so what we're talking about here, when we come to a suburb level, we have a different way of assessing the health of a suburb. We don't look at previous performance to gauge future performance. We look at current on-the-ground demand. So we look at a number of metrics. So suburb sales volumes trending upwards and healthy, days on markets trending downwards and healthy, yields at a high point in the cycle and healthy. If they've got ticks and crosses, We look at that at a local government area level and also at the suburb level. Here, we can filter by 3 or more ticks and crosses, which then gets us down even further to 2 LGAs. And then the third, so just a few people coming through with blurriness issues. I'll just pause things there. If things are blurry, there is a link. I'll just post it over in the chat bar again for you. Adore and Helen. Yeah, this is a link to jump straight into the live feed in YouTube, which should be a lot clearer. Sometimes when a new slide is shown or a new page is updated, it takes a few seconds for it to refresh. And there will also be a recording sent out after this, which is perfect in quality, typically. So there's a few different options. If you'd also like, you've got a reconnect button down the bottom. If you resize your browser slightly, it might clear things up a little bit. And also, if you've got any other videos or other computers sharing your connection, if you close those down, it will really dedicate things to the presentation. So what you can see now, we've got our things down to 2 individual LGAs in the whole Queensland. One of them has a very high opinion score. So we've actually had over 100 interviews in 2015 across local area experts, buyers agents, valuers, researchers, real estate institute members, people on the ground who really know things. And we normalised that information, we assessed them and made sure it was consistent across the country, and then applied an opinion and sentiment score with a local government area. So that is now topped up. We keep that current by monitoring media and sentiment in media, positive or negative mentions of growth or investor interest in a local government area, and the higher the score, the better. So Moreton Bay is right up there at the moment. Very strong opinion. Lots of eyeballs on Moreton Bay at the moment, though. So you can see here how we have got very quickly down to 1 local government area in Queensland that potentially is leading the way. That is only one way, but I just wanted to get down that far to start with, and I'll continue back in the slide. So I just want to make the point, the next really key piece of the puzzle is importance of live data. We need to be able to rely on what we see and the recommendations made, that it's current and we haven't missed the boat. So instead of relying on data and a report that may be up to 10 weeks out of date, or it might be last quarter of last year information, it might take 4 weeks for that to be collated and all brought together. And by the time we get it into our hot little hands, there's the horse has already bolted. There's a lot of investors in that market, and the window, the opportunity, we may have already been missed that hockey stick growth, or that growth really starting to rocket off, and we might be coming up against 5 other investors for that property and really having to outbid each other. So if you're acting on the live data as of today, you cannot make more informed and timely decisions. That's what it's all about. That is how you can optimize your buying opportunity and make sure it is absolutely prime for that growth from day one. So you can see all of those numbers that you just saw at the local government area and the state level, they have a live heartbeat against them. That is current as of today. So timing is everything. I'm just introducing this term, hockey stick growth. Look out for that in a moment, because that is all about timing the market. We may have had periods of flat growth, and when they really start to rocket, we want to position ourselves right there. So how can we do this? How can we look for hockey stick growth? Local government area level research is optimum. So state is probably too general, or it is too general. Even city is too general. So Sydney level information is too general. Suburb is sometimes too specific. What we need to look for is the interplay and the relationship between the local government area, what's happening there. Is that amplified into the suburb? And is the streets then, or are there streets in that suburb that are set to amplify the suburb? Really getting that consistent all the way through. That's how our tools are optimized. So you can see how you've come through from the state into the local government area, and I'll show you the other few levels in a moment. So there, as I mentioned, the interplay is very important. We need to splash a little bit of common sense here. I'm just going to lead into the next slide with this. Yeah, in terms of with a little bit of common sense, why is this buying window open for only a short amount of time? And I'll use Moreton Bay. Tony has just mentioned it, and it is relevant to if this is an issue with Moreton Bay. There's so many eyes on it, and I would say yes. In general, there's still some very specific and outstanding investment opportunities for sophisticated investors in Moreton Bay. But generally speaking, what's happened in these areas, you've got the government drawing a big circle around them saying, we want 500,000 people living in this local government area by 2035. We are building a new train line, a university, a business park, a marina, a Westfields, an IKEA. It's all happening in here, and you've got all of these people moving towards the business park to work. So, and also commute into the Brisbane CBD. So you've got this whole new population shift. Generally, when people move towards a local government area, they will usually be renting first and just suss out whether this is for them. And that might be about 6 months, and then they may come in and actually purchase. So when they come in and they rent first, that pushes upward pressure on rent. That then increases yields because the actual selling price hasn't increased yet, so yields increase. Then you might start seeing more investors attracted to that local government area, and then the word starts catching on amongst investors because yields are very attractive. And then by that stage, you've also got that round of owner-occupiers coming in and buying into the market as well. So what you need to do is you need to see, as soon as those metrics, which I'll go into more detail, as soon as they start moving in the positive direction, don't necessarily buy when the train line is announced or when it's been built. Start looking for those positive signs of imminent growth, buy then, and then ride that wave of growth generated by the masses. That's what it's all about. And it all comes back to just buyer behavior. And that's really what it is. I'm just trying to break it through. That's the buyer behavior. Let's try and sync that to metrics and research and how we can actually do that over and over again. Okay, so I have actually done a local government area analysis example. I did clump them two together. So I'll skip straight through that. What we're now trying to do in Moreton Bay, as an example, what we're trying to do in Moreton Bay is find the individual suburbs primed for imminent growth. And I'm not really going to use Moreton Bay as an example tonight. I'm going to switch over. I'll do this analysis again for Victoria. And we'll try and look for 8 to 10 o'clock again. Some LGAs that are really in prime position. So you can see there's a lot more LGAs in Victoria between that 8 and 10 o'clock. We can order them based on the opinion score. And you've got a lot jumping out here that are quite familiar names, as an example. But if we were to select an area, let's just select Moreland as an example. There's 12 suburbs within Moreland. If we were to select on Moreland, which suburb in that local government area is leading the charge, is driving things forward? So we need a mechanism to be able to rank suburbs within these local government areas. So what we've done is devised this, which is called the Explore page. It's a visual representation of each suburb in the country. You can see once again that we've got the opinion score. So the higher the opinion score, generally the more heat and the more eyeballs on the market from the insiders where investors generally follow. We've got investor interest. And as opinion is generally high, investors start catching on and the investor interest starts increasing. So you can see more investor interest in Brunswick West as an example, as opposed to right down here in Parkville, which is very low. That is a unique measure. Much of this is unique to Ripe House. We've got a very large set of investors only. So all of you guys on the line are all looking at investing or investors now. You're not owner-occupiers looking to buy an owner-occupier property. We have a very pure data set of investor interest. And looking at the momentum and relationship between opinion and investor interest and the metric score. So the metric score is our on-the-ground assessment of this suburb using our data, which is live, of when that interest is likely to result in imminent growth. So the higher the metric score, the more likely that growth is imminent, not based on imminent or previous growth or whatever it may be. It's on-the-ground assessment of demand and supply. So we're looking for nice big green shapes. More on this later, but a higher investability score means that there's more properties on that market that are in demand in the key streets, which are the Ripe House sweet spot streets set for and amplifying that growth. So you can see here that in Gower Bray, that very few properties on the market in those in-demand Ripe House sweet spot streets. There may be lots of other, two-bedroom units that people are not demanding that have just hit the market, but very difficult to actually buy optimum investment grade properties using our metrics. That's just an example. You can then click on Brunswick East and do our street level analysis. I just wanted to use this page to show how when we get into a local government area, our next job is making sure we get this suburb right and find these suburbs that are really leading the charge for the local government area and driving growth forward, and not the laggards, the suburbs that potentially are holding things back, that don't have that nice dynamic. Okay, so that's how we can do it visually. I have probably covered this. We want growth from day one, not in 6 months' time. We want to beat the masses and generate outstanding growth based on them coming into the market. And we want to target suburbs that may have been lying dormant, but we need a mechanism, as you can see there with the Explore page, that will help us. We can't rely on previous growth to assess future growth. We need to see the stars aligning using other mechanisms. So you can see that using the Explore the Nation page there with the radar charts. And this is all about trying to find hockey stick growth. So this slide here is what I'm talking about. We may have seen suburbs moving along and not doing much for 5 or 10 years, and then suddenly the stars align and things shoot up, and then they'll level out after 6 months or a year. We want to position ourselves at the optimum time, where we've got best use of our capital. The opportunity cost is the highest. We aren't holding things without the growth. We can get right in there, make our money, and then divest further. That's what it's all about. That's the hockey stick growth. So I just wanted to clarify, does hockey stick growth sound like something that would work? And can you see how that concept can be applied and something that we should target when looking for growth? Is it making sense? Or did you want me to sort of go into a little bit more detail with what I'm sort of saying on that? And I'll wait for that to come through. But just have a think about those charts. And yeah, thanks, Helen. I love it too. Thanks, Robin. In those charts, and you can see the flatlining and then things really shoot off, where on that chart potentially would you buy? So this is not a real life example, but it is loosely based on Sydney. Would you buy, back here in 1995 and hold it, 1985, and potentially hold it without any growth for 10 whole years? Would you buy in 1995 and have reasonable growth for 3 years and things really start skyrocketing in 1998? Or would you potentially buy in 1998 and have that amazing rocket-like growth through for the next 2 years? So it's at breakout, Robin. I guess this is crystal ball type stuff. It's at breakout. It's a really nice way of saying it. With a crystal ball, we can look back and we can time things. But what it's all about is trying to find the patterns and the combination of factors that will be more likely to find these things. So, around 1998, a lot of you are coming through and saying that. 1980 cash on cash return might have been the highest, but you've had to hold that for 20 whole years as an example. What I just wanted to illustrate now was an actual example where a Ripe House user, Guy Williams, has been able to methodically and consistently be able to position himself as that hockey stick is about to emerge. So 25% average growth in the first year across 10 properties purchased, over 100% cash on cash return on each property. And these are not 2% yielding properties. The average yield across these 10 properties was 6.25%. So this is not some pie in the sky case study or, claim to fame, I suppose. All of the details are on our investor content portal. So we've got articles coming there on a daily basis, written internally by Ripe House staff and also contributors who contribute to us. There's a full case study over here on the Frontier Investor. So I'm going to jump across to that now. I have it preloaded. So it's thefrontierinvestor.com.au. If you wanted to come in and search for Anna Cooper, who a lot of you know really well, she does a lot of amazing things for us here at Ripe House. She interviewed Guy over a number of weeks and really tried to find the absolute essence of what he did. But in the process of doing that, it was uncovered, which is fully revealed here. This is part 2. There's 2 parts. You can see it's really popular over here on the Frontier Investor. One of our amazing, most popular articles, obviously. it details in absolute detail how he did it and his approach. And then we go into more details with articles about Guy, about how he manages the properties, how he manages a large portfolio, how he structures finance, etc. And watch out, because we're releasing soon a negotiation module in the Learning Centre. So ripehouse.com.au/learn, all about how Guy goes about his negotiation. He's an expert negotiator. We're really trying to document his process and get it out for you. But right down here at the bottom, you can actually go through all of the purchases individually. The Ballarat, Victoria, Logan, Wodonga, Delacombe, Victoria, Salisbury, Sebastopol, Wodonga again, and Caboolture in Moreton. You can see all of the individual properties. This is how to position properties at the start of that hockey stick growth, okay? So go through that in your own time and check it out, and let us know if you're learning something, if you'd like any more questions, and we can pick Guy's brain again. There's actually a recording of a webcast we did with Guy going back about 2 months, where he went through in amazing detail how he does that. So that's on our YouTube channel. Go to Jacob Field on YouTube and search for it that way. Look, yeah, I've just jumped into the Frontier Investor example, but what I wanted to just break down for you now is the drivers of hockey stick growth. So I've gone through a little bit of the buyer behavior stuff. Let's go into the science, and what are some of the metrics that we can see on the ground in live terms. It has to be live. We can't rely on old data to do this. We need to find that absolute optimum buying window. What are some of the data and numbers that we can look at? So demand is increasing, population is increasing, public building works, etc. are occurring. That is an isolated incident that occurs. At some point in the future, rents increase. Property hasn't appreciated in value or it's not keeping up in terms of the rental increases are really leading the way. So therefore yields are also increasing. Very important when both of them are coming up together. That's our first buying signal. Then we're starting to see sales volumes trending upwards. That is now saying that those rents and yields increasing are attracting other investors, and also that round of investors, the round of tenants are now buying into the market. Sales volumes are trending upwards. The market is met. So people are now starting to transact at the asking price in far higher regularity. That's the second stage. Then we look for, is days on market steady? So if all of this is occurring, but developers are putting hundreds of properties into the market, sales volumes will still be going upwards, but days on market might be steady or even increasing, because it's not neutralizing the supply and demand there. So if days on market is steady and or decreasing at the same time, it's very powerful. We've got an extremely powerful combination of things. If you can think back, they're our 6 ticks and crosses. When we find them at a suburb level, we get a higher metric score on the Explore Your Nation page. Sorry, I'll just flip over. Yeah, so when all those 6 things are in alignment, you get a higher metric score here. You've got more ticks and crosses on the suburb, which is a very positive thing. You can see how they're all related there. So when all of those things are in alignment, that is the buy point. That is the imminent growth likely to occur. It's got nothing to do with previous performance or any of those things. This is how we're finding these growth areas. Okay, so within Ripehouse, there's a few different ways that we can do this. You've seen the holistic research tools, which is in the middle. Okay, so that's when you can use the tools and you can guide yourself through the different layers. There's another few ways that you can do it. So we know that you're all different, and we know that people do things in different ways. So if you'd like to really get down and dirty and actually, use the research tools and do it and get down to those results, it's really easy to do and you can see it visually done. If you'd like to delegate to the experts, so we have a monthly report which has a list of our absolute best buying window, optimum buying window suburbs. If you'd like to align yourself more to a renovate for profit strategy, align yourself more to the experts integrated into Ripehouse who have that strategy, and follow them. You can see the exact suburbs that they're recommending at any one time. You can then use our tools to find the individual properties and appraise them. If you'd like to tweak things, so there's more on this in a moment. If you'd like to tweak those rules and really match it to your own outcomes, we have over 100 metrics at a suburb, local government area and state level that you can track and you can back check. So you can see the different metrics, you can see the relationship between each of them, you can develop your own strategy, and you can retrospectively see if it's successful or not. And then also then see which suburbs are currently qualifying for that strategy. So more on that in a moment. I wanted to now jump over and illustrate how you can leverage and align yourself with an expert. And this is all about the report that Jane and I released last week. So the big reveal, the Australia's top 5 renovation suburbs report. It's available also for all of the Ripehouse subscribers on an annual plan. It's in your Learn page now. So www.ripehouse.com.au/learn. It's there for you and waiting. Let's go and delegate to Jane. I'm going to take you through the process of how we put the report together, the strategy, the suburbs, and how you can really get moving with using that report. So let's jump into that. I'm going to take you through the actual report in itself. I'm not going to go through the whole page. Sorry, I've got the link. Excuse me one moment, and I'll just load that up. I've got the wrong link preloaded. I'm sorry, guys. Okay, just while that's loading, I'm just actually loading up the report so you can see the formatting of it. At the same time that I am loading that, I'm going to go over here to the experts page. And so you can see that there's multiple ways of doing things within Ripehouse. It's logged me out. Okay, if you'd like to be able to recreate this yourself, I've just logged in here. You can see the Ripehouse dashboard page. You can see our Ripehouse newsfeed, all of the articles from the Frontier Investor. You can see other investors have come in here and designed their own strategies. You can see Matt has actually just, in the last 24 hours, designed a strategy that has amazing growth. It might be very specific and might be identifying a really unique set of circumstances that have generated amazing growth. And it may not be, that easily repeatable, but you can see a running list of other people using the platform doing amazing things, and you can even use their rule sets as a baseline for your own. So we might use that as an example. One here that seems interesting is Petra. We'll click on her rules. That's coming in, loading up the rule system. So this is one of the ways you can find suburbs. You can design your own strategy. You can use our rule-based system to put them together. So Petra's literally just used is last year growth, last 10-year growth above 5%. We've actually got a leaderboard within the platform, so you can see all of the other investors and the rules that they have put forward, and these are ranked by how successful the strategies have been in being back-checked. So Matt's strategy here has got 11 rules and had amazing results, and 35 suburbs are currently qualifying for Matt's strategy. Yeah, you can actually click on the suburbs that are outputted. You can see all the rules, sales volumes above 5 per month, sales volumes trending upwards, vacancy rates under 3%, yields trending upwards. So coming back to those same concepts around the buyer behavior, days on market under 120, occupancy type in the suburbs, so between 30 and 70% tenants. Sales volumes is at a high point in the cycle. So once again, sales volumes are trending upwards and at a high point in the cycle, showing that property is starting to transact. Yields at a high point. You can see 3 or more ticks and population trending upwards. You can literally process that. You can see the historical growth and the likely growth. All of the previous months where every suburb in the country has satisfied those rules going back up to 15 years. We've then drawn a line in the sand and aggregated our growth from each of those buy points. And then we've had, so you would expect these rules, if combined together, will generate 11.7% growth above and beyond the normal. And at the moment, I won't click on the 35 suburbs because that's giving the game away for Matt. Paying Ripehouse subscribers get that gold. They get to see those suburbs. What we can do is we can also go back and delegate. So Matt is an individual investor. You can see other investors and what they're doing. You can use them as a base and improve upon for your own benefit. and really try and help each other. That's what it's all about. But you can also come across here and use Jane as a base, because Jane has developed her rules and we'll work back and forth. But she's more about finding suburbs which have great growth potential, but also amazing renovation potential. That's the priority here. So you can see the estimated return on investment in your first 5 years. You can see how there's cost there for renovation, and then you manufacture equity. You can see that Jane performs at 8.4% above average generally, and there's 25 suburbs. You can see exactly where they're located and the average conditions of each of those suburbs. You can see an example of actual properties on the market today in those suburbs in the key sweet spot streets that are in demand. So a lot of things, these are the actual properties that are potentially you would be suggested to buy in those suburbs. You can see all of the information about Jane's strategy. You can actually view the report, which is detailed information. Hopefully that's loaded. I'll just check that for us. I'll just load that up now. So you can really piggyback and ride on the shoulders of other experts in the industry. That's all getting us towards a list of suburbs. Okay, so I'm not going to click on that link because that's literally going to load up all of Jane's 25 suburbs in the Explore page, and you can pick and choose your own suburbs from that. I won't click on that right now. Sorry, I'm just trying to still load Jane's report. I can't do two things at once. I do apologise. Sometimes while that's just loading, here it is in the background. So just let me know if you can see that. I'll just double check. Yep, okay, wonderful. So you can see the format. It's 22 pages. We're going to a lot of information around our methodology and the whys. Some notes from Jane about how she does things, the formula, the reasons why, and some of the history and track record. And the first suburb in the report, which we're going to talk about and discuss now, is Nundar, the suburb of Nundar, which is in the northern area of Brisbane. You can see, I'm just going to skip down to it now, 2 pages or 3 pages, sorry, of very detailed, 2 pages, sorry, of very detailed specific recommendations. We get you down to 4 200 dwelling lots within Nundar to focus, which I'm now going to go in and analyze with the software for us as an example. This is what it's all about with the, you've got a number of mechanisms to get you to your endpoint. That's what it's all about. Yeah, let's just jump in here, and I'm going to load up Nundar. So what we've done now, you can get to this page a number of ways. You can click on the radar chart, which is the Explore page, and that will take you through. This is a map-based suburb analysis page. It's called our Invest page. It's nothing like it. It's street-level analysis. It's all about finding the exact streets and properties that are set for imminent and above average growth. So I won't go into the street-level analysis yet. I've got a few more points to make on that, but Nundar is the suburb in question. We've got 123 properties. Just to answer your question there, Simon, Ripehouse goes across the internet like a search engine would. So like Google, it brings all of the listings together into one place for you. We track days on market data, any listing revision history. You can filter properties. So you can see one property here at the top of the list has been on the market for 180 days. It's been discounted 3%. You can see amazing on-market activity information all in the one place here. Let's just pause things there. Remember, it said that the in-demand property type at the moment in Nundar was a 2-bedroom unit. But what we're doing here with Jane, and we've detailed this, is more of a renovate for profit. So renovate for profit has a slightly different dynamic. This is going to be different to the generic capital growth strategy. With renovate for profit, we need to see more houses and strong owner-occupier and tenant demand for houses occurring. So let's just jump back over, and I'll just go through. We need to get the street level right. So when we come into Nundar, how do we ensure that we're going to make sure that the street level is going to amplify our potential results? The way that I try and illustrate this, just think about where you live. You know your suburb intimately. You know these streets to avoid and stay away from. You know the streets to seek out. It's those streets that we're wanting to seek out potentially are going to lead the growth forward. They are the ones that we want to invest in across the country. And this is critical to get right. It's often overlooked, but it's potential to really amplify our results. And it's all about getting these amazing, the mind-boggling growth. It needs to be amplified at the street level. It's a major component of our hockey stick growth. If all of these people are moving towards an area and subsequently buying, we need to be investing in the streets where they are moving to and not the ones that they are not interested in living in. It's very important to get right. How important can it be? What we've done, our research, we've got an amazing database of information on a street level in the country. So things like public housing concentrations, exactly where key amenities are and how those amenities affect price, owner-occupiers versus tenants, houses versus units, higher rents, higher yields, all of these things at a street level. We found that 5 factors combined at a street level amplify your results, your growth results, by 21.9%. So if the suburb increased by 8%, you'd expect that to be almost 10% in growth in the same period, just by getting that street level right. And generally, a ripe house sweet spot is only about 10 to 15% of every suburb. Some suburbs don't have any. If you extrapolate that out over Sydney for the next 10 years, it would mean $240,000 extra in your pocket just by getting that street level right. That's obviously crystal ball type stuff, but projections over the next 10 years, $240,000 extra in your pocket. So the ripe house sweet spot is under 15% public housing in that street. You've got lots and a majority of the in-demand property type. So if people are moving towards 3-bedroom houses are common and in demand in that street. You've got the absolute ultimate mix of above average rents. So you can remember back that people are moving towards the area, they're driving up rents. So rents are high in this street and also yields are high and there's strong tenant demand. So you get the big 3, absolutely critical. If you get all of this right, that then becomes a ripe house sweet spot. And as mentioned, it amplifies your growth and you get 10 or generally 10 to 15% of each suburb qualifies. So let's do a live street analysis and I'll show you how easy it is to do. So I'm just jumping back and forth. In Nundah, you can zoom in. Each of the red dots on the map is a current on-market property. You can see exactly where public housing is. Lots of public housing in this pocket of Nundah. I'd stay away from that, 21.6%. Critical information. You can see exactly where the yellow areas are, where tenants are demanding, the greener owner-occupiers. You can see exactly where the houses are. So very strong correlation between houses and owner-occupiers and units and tenants. You can see exactly where the higher yielding streets are. So remember these things because these are what constitutes a ripe house sweet spot. You can come up here and have the cheat sheet at the top. Click on the ripe house sweet spots. I'm going to be using a renovate for profit strategy here. And I'm going to then apply that to the map. And you can see exactly the areas suggested to invest in for Jane's renovate for profit strategy. The report goes into a lot more detail. You can now come in and filter properties on the market. I only want to show properties that are positioned in those yellow areas. I only want to focus on 3-bedroom houses, which are in demand. Let's apply that filter. I want to get from 123 properties. If I'm looking at suburbs across the country, if I'm looking at suburbs I'm not familiar with, if I'm looking at multiple suburbs, I want to be able to get down to a very small list of properties very quickly. That's what it's all about. This is applying a filter. It's got a lot of calculations going on in the background, so sometimes it takes a few seconds. But it's all about coming into Nundah, finding the key streets, getting ourselves down to 3 individual properties that are on the market. We can see this property at the top, 28 Villaroy Street, has been on the market for 89 days. Current asking price is $599,000. It has been discounted by 6% already. You can see for a renovate for profit strategy, completely original condition, 600 square meter block. It has been discounted, so there's signs of distress. Why don't I put things on pause there? Because I'm going to go in a moment and talk about how we can use this information to effectively negotiate and potentially buy below market. So I'd love to hear some feedback. How are you finding things, guys? Is this on the right track? Any questions, please get in there and ask. I'd love to make this a dynamic conversation, obviously. So let's just put things on pause with the street level analysis. What we're going to talk about now is the fifth piece of the puzzle. Thanks, Louis. Awesome. Okay, thanks, Prasath. Is the fifth piece of the puzzle: appraise and negotiate like a pro. Okay. Yeah, John's question: how difficult is it to renovate a property in another state? Why don't I grab that at the end, and I can talk through some processes in doing that and some of the types of renovation that I'm talking and sort of suggesting to do. The key is beating the heat. So it's far easier to negotiate if you're not negotiating against 4 other buyers. Beating the heat and being able to position ourselves ready for the hockey stick growth. What we've got to be able to do is reliably assess market condition. So we've got to be able to look at this property and look at the internet and go, hang on, this is above average or below average compared to the suburb overall. So I'll show you how we can do that in a moment. We look for valid comparables and we look at the property itself. So what we need to do is we need to find comparables that are actually comparable. So within 3 months of sale or 6 months worst case, similar condition, similar proximity to amenities and public housing, similar location within the suburbs, similar block sizes, etc. They are actual comparables, and then we need to make sure that they're similar to the property. To negotiate for success, I'll jump in there and give some more details when we go through the property. And what we're trying to do is negotiate or have a conversation with the agent. So have a conversation with the agent, getting them to negotiate on your behalf without potentially knowing it with the vendor. So positioning the negatives or other elements and comparables to the agent to be able to make a very favourable presentation to them, for them to be on side to negotiate on your behalf to the vendor. That's what it's all about. It's not you negotiating with the agent, it's positioning the conversation for them to negotiate with the vendor. Okay, so let's go through some examples and how we can do this. So we have seen the property has been on the market for almost 90 days. It has been presented in original condition for sale. It is quite fresh, but it is quite dated. That may be detracting from the agent's ability to market the property. So the agent may be starting to get a little bit frustrated, I suppose, a little bit stale in the listing. We know that it's been on the market for almost 3 months. We know that it's in average condition, maybe even poor condition. Our algorithms have a go at assessing the condition based on the descriptive text and the type of property that it is. It only does that to try and rank other comparables and make our job a little bit easier there, but in this case, it's got it wrong. Look at the discounting history. So it started off life at $640. In 2 weeks, it discounted at $40,000 very quickly. It's now just hovered around that $600,000 mark for a couple of months. So you can see now that the agent is getting a little bit creative. They've dropped the price by $1,000. The agent, potentially the vendor's expectations weren't realistic, and they've quickly come down within 2 weeks to $600 on the advice of the vendor. The agent's potentially really pushing for this asking price now, really leveraging that to negotiate. So what we're doing now, we've got distress signals, 90 days, discounting history already. You've got unrenovated, potentially listing issues, marketing issues, really going in and negotiating hard on this property, starting out potentially a little bit lower, 575, 580 as an example. But what we want to do also is find comparables to, one, justify the value, and then also to be able to use as a comparable to justify our offer. So let's go in. It's going to go away and find the top 5 valid comparables. Do take the time to dissect each one of these individually. Is the property comparable superior or inferior? This property here looks quite similar, almost exactly the same size block. $675,000 it sold for in July. Maybe slightly grander proportions, but it's unrenovated. That's a very strong demonstration of this property is undervalued or underpriced. $695 there is a very high price. This one is obviously renovated at $750 and superior. $627, no images now supplied. $467, no block size information. It does look quite well presented, but smaller. So you can see how this process of actually validating the comparables, we've got a very strong incidence that's quite reasonably priced at the top up here based on this comparable. we can potentially use other comparables at a lower price to justify our offer. So use this property down here in Nelly Street at 551 to justify. Just say, it's 511 square meters, slightly smaller. Say that we're willing to offer 570 on this property because it is slightly bigger in terms of land size, but we deem the conditions similar and start the conversation there. But once we generate our 5 comparables, you can see it is mostly automated, but I do recommend taking the time to do it yourself. It averages those, and it will tell us how that appraisal may be affected by street level elements. So we know how proximity to schools, shopping and transports affects appraised value, and also proximity to concentrations of public housing. So our baseline comparable analysis is 600. It's a little bit too far away from shopping and schools. Our final appraisal is 580,000. Asking price is 599. As mentioned, probably coming in there at that 575, 580. Between 580 and 600 I'm comfortable with, and I would be doing further investigation at that 595,000 comparable. It was quite intriguing looking at that. If you've got any doubts about this process, click on the Ask Ripehouse button. It will come through to us, and we'll be able to give a second opinion via Twitter when we can. That's taking a while to load over on Twitter at the moment. That comes straight through to the @Ripehouse hashtag. Or our account over there, so you can see how it pre-populates it. So let's just move along. I'm really aware of time, and we've got another really great suburb to get to, which is really about the growth down in Victoria. So I'm trying to get things. So I am aware of time, which I do really apologise for. Are you looking for amazing growth? That's what we're all here for. Are you looking for it, or amazing growth with renovation potential? Amazing growth with great capital gains potential, amazing growth with splittable or development potential. Ripehouse caters for all strategies. We have got experts and ways of using the system which are defined and walk you through for each strategy. But what it's all about is kicking up your investing into top gear and your portfolio to top gear, really supercharging our results and getting us towards our property outcomes, taking the bull by its horns and leading growth forward. What we're trying to do coming into retirement, if we're really trying to improve our lifestyle, improve our net worth while we're establishing ourselves and our families, really, how can we surge towards that with amazing success? That's what it's all about. So just think about what you're trying to do and how you are in your positioning to supercharge those outcomes. In doing that, before we get into the bonus suburbs, so there is another Victorian capital growth suburb that I'd like to talk about. I just wanted to say a big thank you for coming. I know we're going a bit over time, and I do apologise, but we're all here for similar reasons, and from what all of you have been saying on the chat, it's great to see that we are so pumped and happy about property investing. I just hope you've got a lot out of the content, because I get really into it and I love talking about it. But a big thank you. But we're all here to charge towards our amazing growth and outcomes. So I do feel, if you've come this far, what you've seen is really working and right for you in getting you towards your outcomes. So as a big thank you, an exclusive thank you tonight, I'd love to offer a normal price of Ripehouse subscription, only available as an annual subscription membership of $1,597 per annum. I'd love to thank you for coming along, being so proactive and involved and consistent with yourself and the other users on the line to offer you a $400 discount. This is only available for a short period of time. It's a big thank you offer, available till midnight this evening only. What I've done, I'm just clicking this on now. On the right-hand side of your screen, I've added the offer to your page. You can literally click on that, the Join Us button. It will take you through to our bonus page. You can secure this offer. A big thank you, $400 discount off our annual subscription to get you started with us all tonight. So jump across, click on the Join Us button, take you through to our bonus page. You get started on that page, enter in your basic details. It pre-fills the special offer for you, and you can get started straight away. I'd love to get involved with you in the platform. Before we go on, let's go and do it. www.ripehouse.com.au/bonus. That is how you activate this special thank you offer. If you've got any questions, we'll grab it. I can work with you one-on-one once we've covered this special bonus suburb. Yeah, I just sort of would thought I might pop that there before we go into dissecting our next growth suburb. So this suburb actually hasn't been discussed or talked about in any webcast. It's right on the cusp. So it's showing all the right signs to become a growth suburb, an outstanding growth suburb. It's not quite there yet. So we're still seeing some mixed signals. It's surrounded by suburbs which have been featured quite heavily at Ripe House, which are absolutely amazing, strong, big green recommendations for growth at the moment. Some of them it's also surrounded by, in Geelong, have got too much market heat now. Nor Lane is a suburb I might just go into in a little bit of detail tonight. It is showing signs that it's almost right there to transition into one of our strong buy recommendations. But I just wanted to illustrate what we're seeing and what I'd like to see occurring before it does become this big recommendation. It's not a fluke. It's borderline in our August report, which is soon to be released. I'm referring to the July report tonight. Into the July report, we are detailing Corio, which is immediately to the north of Nor Lane. Corio's right up there in the top suburbs in the country in our internal buy recommendations for growth. I'll go through the report and the actual suburb itself and see how we might be able to invest there. Let's do a live example, shall we? I might just refer back to the capital growth report. So right down here, the July edition of our report was actually 99 pages. It's our coffee table companion. It sits with you to dissect and really get involved in the information. It really doesn't leave you asking any questions. You can use it to go into the local government area, the suburb, the street, and the properties. It sits by your side to use the software to work out what to do and how to do it. We try to provide all the support you need to be able to purchase and make decisions. So technology and all of the systems and platforms and can do everything and these amazing results. If you can't make decisions, it's not worth anything. So we try and support things with reports, with webcast events, with the frontier investor and advice from other experts in the industry. Lots of different ways for you to be able to get involved. So while that's just loading, I might leave that going. I have tried to skip through the report. Let's jump right into the suburb. I'll just find the right page. I'll just type it in directly. So Nor Lane, it's a lower socio suburb within Geelong. 64 properties currently on the market. In-demand property type 3-bedroom houses. Corio, immediately to the north. So watch out next Thursday night. This is a big announcement. Private Ripe House subscribers only. We have an expert investor, has a portfolio in 3 figures. Amazing resource. He's been on 10 trips. I think it's 10 or 9 trips this year to Geelong. He's become an absolute expert of Corio. He's kind enough to jump on the line next Thursday night for a private webcast event where he's going to dissect Geelong in absolute methodical detail. The exact streets, we can see it all. I'm not going to give the game away because at the expense of the Ripe House users and our annual subscribers, this is the real value. This is the meat within the subscription. I am talking about Nor Lane as an asterisk, very similar on the different side of the border. It's starting to exhibit, and about 2 months behind Corio. I'm just putting it out there that we've got our eye on it to continue to evolve in the same way that Corio is. So Corio is the absolute buy recommendation at the moment. Nor Lane is soon in its wings. Let's do a quick sweet spot analysis in Nor Lane. We've got 3 Ripe House sweet spot streets, very specific pockets. You'll see that as the suburb matures into the buying window, that might evolve and there might be a few more. But you can see a sweet spot up here in the north, which is right next to Corio. So similar reasons. If we do a filter, let's only look at 3-bedroom houses in these streets. you can see how we can quickly get down to these properties once again and then potentially negotiate on them. So Nor Lane is the big standout. We've got 1 3-bedroom property on the market. This is how we've literally got down to 1 property once again. This is in the street in Nor Lane, set for imminent growth and driving the suburb forward. This property, by the way, looks quite neat, but this is a type of renovation you can potentially come into. I'm just going back through. So John asked the question, how difficult is it to renovate a property in another state? Now, when I'm doing a renovation, is cosmetic, or structural? This property, as an example, would lend itself to a very easily managed remote renovation. Huge bang for your buck. Jane's strategy before looked for 140% difference between unrenovated and renovated. You come in, you spend your 10 to 15%, 10% renovation cost, and you're looking at that 40% uplift. Here, you're coming in, you're putting floating floorboards in, you're painting it white, you're potentially putting a layer of plaster over those bricks and lightening things up. You're doing a really quick bathroom renovation. I probably wouldn't go tiles. I'll put a new vanity in, new shower screen, paint the doors, get it all nice and fresh. The kitchen looks tidy, reface the cupboard doors, 5,000-10,000 max. You've got very low level tradies, no plumbing, no electrician potentially required. That is how you do an awesome bang for buck renovation remotely. That's what it's all about, I suppose, John. So this probably really lends itself to it. When you start getting heat into the market, these opportunities for renovate for profit start to dwindle because you've had it picked over by lots of other investors. So this is how you can really beat that heat and get ahead into these deals. That's probably what a really good example, but I'm just sort of trying to relate that back there, John. I hope that it has helped in answering the question. When you start looking at structural renovations, removing those load-bearing walls, adding another or subdivision out the back, etc., there's obviously more complexity to remotely manage. So look, Ripe House is a community of DIY investors, so we're all the same. We're all trying to do similar things. We've tried to divide the software up into learning and educating ourselves to really work out what we're trying to do and be very clear with our objectives, and then locate properties using the software and other experts and other investors to locate the suburbs, streets and properties to supercharge our results for our needs. Then we help and we support the actual acquisition. So we allow you to manage, and we have a network of other service providers, so property managers, building and pest, across the country that other Ripe House users have used to success. So we're happy to recommend and provide and join you up with other investors doing similar things so you can really help each other. And we also help you to manage your portfolio. So you can upload your portfolio into Ripe House, the fourth area, and then you can track growth. You can look for refinance opportunities and structure your portfolio for the next buy opportunity. So that's all included. It's all about supporting you end to end in your journey. It's designed, I hope it's sort of been made clear, to help you, empower you, and work with you to get amazing results. So it's not designed to just be technology and do great things. It's designed to be really usable and empower you towards your outcomes. So we have the Learning Centre, ripehouse.com.au/learn, the research platform, experts, their reports, and all the tools and research and the frontier investor, etc., is all included in what we do here. We also hold private webcasts. So next Thursday is the Geelong event, which is all by demand. We have coaching where you can bring along your properties and have them assessed and vetted against your outcomes. We have live phone, chat, and email support. It's designed to help and not hinder, I think, is what it's all about. In doing things. So look, this is just a little bit about what other people in the industry have got to say. So in researchers, investors, buyers agents and educators across the industry, and the amazing things that they're able to do with Ripe House and the results that they have had, and these hundreds more of examples that I'd love to be able to put up here, but I am aware of time. Look, I did mention, as a big thank you, there's a $400 saving for tonight only. I'd love to just show and demonstrate how we are trying to support and work with you towards your investment outcomes and really drive towards your success. So We open up everything. So you've seen 2 reports. We're actually generating reports every month. We don't generate them quarterly. They are data pool. So we've got our quarterly, our August report coming out within a few days. We've literally just pulled the data. It is live. The reports are live in your hand and timely enough to make critical decisions for you. We update them monthly. We update them to be live to that month. And you can see we've got the top 5 renovation suburbs for each month, and also the growth suburbs, which have, I think, 26 suburbs from memory this month. They come to you, and I'd like to include them free for all annual subscribers for every month of your subscription. They are normally $97 each. There's 24 reports now included in this special thank you offer. And as a big asterisk, we also have 3 more reports per month coming to your door very soon. So a cash flow report, a development report, and a scarcity lower risk report, which is all about finding those suburbs, the blue chip type regions. I can say we haven't produced them yet, but that is going to be all included to you as part of this offer every month, ongoing for your entire subscription. So amazing value. As mentioned, we've got private group coaching events that are only available to Ripe House subscribers. I'd love to include that for you as well to get you everything you need to move forward. This is over $1,800, more than that in bonus value. I'd love to package together for you as a big thank you tonight. How you can lock this in before we get into the Q&A right in a few moments, jump across to www.ripehouse.com.au/bonus. You can click on the big green Get Started button. All of our payments are processed via Stripe. They are best in class and secure transaction providers. They manage the transaction between you and them. It doesn't come through us. The integrity is maintained directly with Stripe. There is the 3 installment payment option there for you, which does work out to be a little bit more expensive, but may actually suit you a little bit better. 3 monthly installments. Look, I'm going to put things on pause there. I'll put things on mute and gather the questions. I'll come back in a few moments with some Q&As. I really thank you for coming tonight. If you don't want to stick around for the questions, no worries. Thank you for coming. I really hope you've got something out of this evening. With or without the Ripe House platform, it's all about helping each other and giving great information and content. If you've got any feedback or suggestions, please let me know via the live support or phone support 1300 or email support. If you don't want to see around for questions, thank you for coming. I'll see all of the rest of you on the other side in a few moments. Okay, keep the questions coming. Lots here already. I'll just work through them top to bottom. No worries, Tony. Thank you very much. I hope you found it beneficial. Come through with any questions. Yeah, reach out to me. I can help you and join you up with some recent investors who have had positive experiences with building and pests in Newcastle. Susan has discussed Nor Lane. So, Susan, we are discussing Nor Lane here in the context of growth. Having said that, the property that we just identified then using the system has good renovate potential, but that's very subjective. So we are looking at a pure growth play based on the suburb. Generally, renovate for profit wouldn't really work there. Having said that, there's always exceptions. That property individually would really work for a nice cosmetic renovation. Having said that, it is a lower socioeconomic suburb that really is looking for that uplift. A lot of new builds going through the area, so a lot of knockdowns and stuff occurring. Generally, Geelong is gentrifying; it's improving overall. So yeah, you might have a risk of overcapitalising right off the bat, but definite room for renovate for profit and nice, reasonably spec'd renovations going forward. Hope that clarified that for you. Robin, I can jump in. I'm happy to honour the offer made tonight for you and lock in what you've just seen and starting the subscription on pause for you until you are ready. If you are coming back from overseas, etc. So I am willing to honour the offer if you do sign up tonight and then activate the starting date at a later time. Thanks. I do get quite passionate, Robin. Yes, Kit. Look, I did, in terms of, and Kit's saying, lucky agent for this property, we'll be getting lots of $570,000 offers tomorrow. Look, this is one property that's come out of the end of the funnel. So you can see that there's a bit of crossover there. I've used a very specific example in tonight's webcast. Jane has got 25 suburbs that form the suburbs that spit out the end of her strategy. You can jump on there really quickly and see them all. You can then join up the sweet spots across them. Might be able to shortlist down to 50 or 75 properties. So you can see that there might be some interest generated from this webcast on that one property, but this is a scalable solution that at any one time allows you to find the absolute optimum opportunities across the country. So it's been able to do that in a sustainable way because we're using the technology in a really smart way. That's what it's all about. Louis just asking where we search and source the listings from. Once again, yeah, we go across the internet. We don't own that data. We provide it as a search engine. So you click on the link and it goes through to actually contact the agent and be able to then negotiate with them directly there. We just provide it as a Google-like search engine. Simon's asking, can you identify splitter blocks and subdividable blocks? So there are ways which I can reach out to me, Simon, and I can show you using the software. It's quite a specific example, so I didn't demonstrate it tonight, about how you can filter and only display blocks that satisfy size requirements, etc. So you can do that at scale. You can join together multiple suburbs that you're looking at and only show you the on-the-market properties that satisfy that requirement. I can show you how that can be all set up. So just going back forward, so Robin was talking about the high side street. Sorry, I might just add a little bit more clarification there around your question around the high side of the street in Nunda. Okay, so Haley's just asking to follow the experts. So the page there is through your dashboard. You can go through the locate research tools link at the top there, or you can go to ripehouse.com.au/locate, and then we've got 4 different ways you can search for property. So you can click on the experts tab, the research tab, the design your own strategy tab, or you can view the leaderboard of all of the other investors and what they're doing. So I hope that's answered your question. Tony's just asked, is there an issue with Moreton Bay? Lots of eyes on it. There's very specific examples in Moreton Bay of still opportunity. The window is closing. It still is our number one, very strongly our number one investor interest local government area for July and August. A lot of eyeballs now on Moreton Bay. We're now seeing, to beat that, a lot of that heat coming down towards Victoria, even down here in Tasmania. Okay, I might pop things on pause there. I'll stop the broadcast, but what I'll do, I'll stay on the chat bar, and I'm happy to talk with you individually. Keep the questions coming. I'm happy to yeah, obviously answer anything. It's a lot of subjective questions. You know, quite subjective questions. Robin, just the last one has just come through. I mentioned the blue chip areas, so I can work with you directly in terms of one of the country's leading experts in terms of blue chip investment. He's working very closely with him at the moment in devising his secret sauce and rules. There's a few ways that we do it. So proximity to CBD, low vacancy rates, high option clearance rates, yeah, low sales volumes. So when I say low sales volumes, they're actually at the low point compared to not many properties turnover. So it's a different kettle of fish. What we're looking for with blue chip suburbs is longer growth curves. So they're not looking for that immediate growth, but you want to have 1 or 2% above average growth every year for 25 years. So we call that within Ripehouse a scarcity strategy. You know, you're thinking your eastern suburbs in Sydney, your northern beaches, you know, even out into the inner west, you're thinking Turaks down the beaches in Brightons, etc. in Victoria. These are scarce, or growth is based on scarcity. It's a longer, slower burn. It's a different outcome you're looking for. And I can talk with you and show you exactly how to use the software to be optimizing towards finding those exact properties and streets. It does sink into your outcomes, so you might have lots of cash producing assets, a lot of high cash flow properties. Now you're looking to, they generally yield quite low, so you're looking to have lots of growth on the back of these scarce type investments, generally a higher purchase price as well. So I hope that's answered your question, Robin. I can show you and we can work with you very closely to understand how to do that in the software. I'll pop things once again. Thank you so much for your time on the chat line, via the text chat line, to answer any questions. Thank you so much for your time. I hope you've found it beneficial.